Hello and welcome. We are here with Dan Morehead, founder and CEO of Pantera Capital. Hi, Dan.
Hey, good afternoon.
I'm Constantin Kogan, and I will be your host today. To start off, we have to throw a legal disclaimer that whatever we're going to discuss here, this is content only for informational purposes, and you should not construe any such information or other material as legal, tax, investment, financial, or other advice. It's a great pleasure to have you here, and we met 2 years ago. Later, we both participated in multiple conferences, and it was always a pleasure to listen to your public speaking, and you have a unique vision. You've invested in multiple companies, and Pantera Capital is one of the early adopters in the space. As I understand, it's one of the first investment firms in crypto, and you emerged around 2013, right? So you were focused exclusively on Bitcoin and other digital currencies. Prior to that, as I understand, you managed SEC-registered hedge fund with more than $1.3 billion under management, with various strategies primarily for discretionary global macro fund and launched 4 non-macro funds, and then crypto. So can you tell us a little bit about yourself and the history of how did you start in this industry?
Sure. So I started out as a fixed income trader. I was actually the first asset-backed securities trader at Goldman Sachs in the 80s. So we're trading asset-backed securities, and now we're trading asset-backed tokens, which is a nice full circle. And then I started trading in a global macro hedge fund style, where you're trading big disruptions, equity indices, commodities, currencies, bonds around the world, Russian privatization or, Indonesian interest rates, Brazilian inflation-linked bonds, all those kinds of things. And from there, it's basically taking a 30,000-foot view of macroeconomics and seeing where you can find a trade that there's a disruption or something is mispriced. Hopefully you find very asymmetric returns, something where the amount you could potentially lose is a lot less than the amount you could possibly make. And I ultimately went to work at Tiger Management, which at the time was one of the biggest hedge funds. And I was working with Julian Robertson, and his style is very much that, is looking around the world at things that are mispriced, big disruptions, things to take advantage of. And most of what I would be trading are these, the big currencies, the big equity markets, but there would be occasionally interesting things that would come up, like Middle Eastern equities, or in the Gorbachev era, went to Russia to invest in privatizations there. So those things would come up every 3 or 4 years. But in 2011, when I got interested in Bitcoin, it took me a year or so to get my head around it, but I came to the belief, which I still hold very strongly, that it's going to be orders of magnitude bigger than all of those other disruptions, because it's disrupting so many different things, money movement, storage of wealth, payment rails, property registries, all these different things it can do. And all of those are the biggest and most valuable things on earth. And so if it only gets 2% market share of gold and 4% market share of Visa, MasterCard, or any of these different use cases that it could possibly be used at, it's going to be a very attractive trade. And that's why I actually think it's the most compelling trade I've seen in my entire life. Is there's so much more upside than there is downside. It's a very asymmetric trade.
Yeah, I couldn't agree more. It's asymmetric, uncorrelated, decentralized asset class with a lot of opportunities and applications. Right now, you have dozens of employees, office in San Francisco, London, and New York, being a leading fund in crypto industry. Haven't spent 35 years trading global macro disruptions with your tremendous experience. What is your perspective on the coronavirus crisis and, as they say, short recession nowadays?
Oh yeah, so when I was sitting down to write our investor letter a few weeks ago, I was trying to think of a way to express the fragility of the global supply chains and how big a recession this is going to be. And at the time, On March 10th, I took a screenshot of a Bloomberg screen that had only 50% of economists predicting recession in the United States. And at the time, I was like, wow, that's just so crazy. This is really going to be huge. And my view and everyone's views are moving to, deeper recession. And I unfortunately think it's going to be much deeper than most people perceive. And I was trying to encapsulate that in a way to communicate how worried I was about the supply chains in the world. And I was reminded of this great Milton Friedman piece where he was talking about the ability to make a pencil, the simplest thing on earth, and it takes thousands of people to make the steel, to make the saw, to cut down the tree, and to ultimately make a pencil, and how that freedom of choice, which Free to Choose is the title of his book, always is better than every other scenario. And in this case, I actually think it might not be. This might be the exception to the rule. And that the freedom for every single county or every single state or every single country to enact their own policies of how to deal with the virus is suboptimal, and it's really going to have some profound impacts. And I'm just focused on the economic side. So on economics, I think it's going to be really a very protracted recession, because we have some regions like China that locked down very early but are now trying to restart and sell their products to some customers, but the customers they used to have now are all locked down. And then the regions that are not yet locked down will probably end up locking down, in the future. And so when you have this very asynchronous stoppage of the supply chains of the world, it's going to be very hard to get it started again. And then, from just a epidemiological standpoint, if you're trying to fight the virus in one spot and then you move to fight it somewhere else, and then you move to fight it in a third place, it starts coming back in those other spots. And it's just going to be, a very challenging situation. But from a macroeconomic perspective, it's going to have a big impact on GDP. And then for a long, you mentioned that, cryptocurrency is typically uncorrelated with the rest of the assets in the world, and that's typically true. But this is such a big macroeconomic impact. It will have a very direct impact on cryptocurrencies, which, we can talk about at length, but it does. This is one of the first times in the last 8 years I've been involved in crypto where I think the real world is having a really big impact on cryptocurrency.
Oh, yes, I agree. And jump into your investment letter. I read it and I find it exceptional. I implore people who haven't read it to take a look. You wrote with confidence that the recovery will not be V-shaped. First of all, can you please explain what V-shaped recession means and why do you think so?
Well, yeah, and I would say with all humility, there's a lot of things that are so complicated and confusing here, and so many things I don't have a strong opinion on. But the few weeks ago, and there was a lot of talk about the recovery potentially being V-shaped, and that's essentially the only thing I am confident won't be true. Is a V-shaped recession is where some systemic shock happens and economy stops, and then it's able to just restart right on a dime. And I think the best example of that would be the September 11th tragedy, that essentially every plane in the United States was grounded for 3 days, and then 3 days later they all got back in the air and the economy really restarted. This is really different, and it's mainly from the earlier point I made about how asynchronous the policy response is. That if you think about the kind of the least bad way to deal with this virus would be if everyone on Earth just went inside for 2 weeks, and people that were infected by the virus could get medical treatment, and all the other people that were not infected could get back to work. That in and of itself is a 4% hit to GDP, right? If you take 2 weeks divided by 52, that's 4%. So that's already a huge hit. But if we do it the other way, where China shuts down for a few months, And then right when they're trying to restart, Europe and the US is shutting down. And then potentially right when we're trying to restart, the developing world is shutting down. It's just going to kind of keep spilling back and forth, and means I think we're going to have a very slow recovery out of this, and it won't be that really quick bad thing where you bounce straight back.
Yeah, 100% agree. And going into the current monetary policies and fiscal stimulus, there are different analyses of the situation, and technicalities are less important. What I think is more important for every person is the basic question: what's next? With trillions of new money artificially infused into economy, we realize that the current policies are not efficient. And the crazy part about it is that regular people will only get a small part of the 2 trillion package, and the total cost of direct assistance to people will be only $250 billion, right? And the Treasury Department would divvy up like about $500 billion, into loans struggling industries like airlines, cities, and states. But we even heard that like casinos got some bailout, and hospitals will get only $100 billion. So can you talk a little bit about like what's going to happen next?
Well, I would say that this is a unique crisis, or at least the first time since 1918 we've dealt with something like this. And so all the policy tools that we're used to in our lifetimes really aren't very effective. And if you think about it, that all the recessions we've dealt with in our lifetimes have been from a lack of credit or a lack of income. And so fiscal and monetary policy is very accustomed to dealing with that. And equally importantly, the individuals or institutions at each of those finance ministries and central banks is used to coordinating policy and attacking the problem. This is an invisible physical attacker, right? It's a completely different thing, and it's essentially preventing commerce. So fiscal policy and monetary policy really they certainly don't attack the problem itself. They don't stop the virus. And then I don't think they're very effective at combating the economic implications, unfortunately. And if you think about it, if the Fed cut rates 100 basis points, are you more likely to go out to the movies that night? You're not. The Fed could cut 1,000 basis points, you're not going to go to the movies, right? So these policy tools that used to incentivize people or push people or encourage people to take goods and services or investments, really just don't have any power. And if we take monetary policy first, the monetary policy lever itself is almost played out. In the previous crisis in 2008, 2009, the United States cut 438 basis points. We only had 150 basis points of ammo when we started this crisis, and it's all spent. So the Fed has rates at zero. And that's generally true around the world, that Japan invented the zero interest rate policy just after right when I was working in Japan in the early 90s. And they called that period the lost decade. That was 25 years to go. And they've kept rates at zero basically for 25 years. And most of the rest of the developed world's followed them, getting rates down to essentially zero, or in a couple cases negative. The US and a few countries have tried to raise rates over the last couple of years, but with this crisis, rates have slammed back to zero. But given how close they were from zero, in this crisis, it's estimated that the global policy rate will only go down by 55 basis points. And in the last recession, 2008, 2009, the global policy response was almost 300 basis points. So you're going to see very little in monetary policy relative to previous stimulus efforts. And then that policy is probably going to have a tiny fraction of the efficacy it has against an income or credit recession. So I think the monetary thing is kind of already completely played out. There's not much to do there. On the fiscal side, governments around the world are trying various approaches to try and stimulate their economies. In the United States, it's actually the third stimulus bill. The big one was $2 trillion. Those are just really big numbers. There was a great line attributed to Everett Dirksen, a senator from the 60s, who said, a billion here, a billion there, pretty soon it starts to add up to real money. $1 trillion here, $1 trillion there, that's seriously real money. And, we're starting to talk in tens of percent of GDP. It seems unlikely that these measures are going to be able to forestall a very, very steep recession in the United States and in the globe. And so I think you're going to see further fiscal stimulus coming. And I think it's highly likely that the United States emerged from this crisis with more debt than it had after fighting the Great Depression and World War II, which is absolutely head-spinning statistic, but it's true. And again, if I just am looking at it from my job, which is trade cryptocurrencies, it seems very, very clear to me that if you print trillions of dollars more quantity of paper money, the things that are not quantitatively easable, like stocks or gold or real estate or Bitcoin or other cryptocurrencies, they will at least go down less than they would have otherwise. But in the case of equities, where there's earnings hits and there's some underlying fundamentals that are changing, but in things like gold or Bitcoin, where the fundamentals haven't changed, they're still the same. I think it has to have a very strong upward pressure on the exchange rate between the US dollar and Bitcoin, right? It's really, those two are both just exchange rates. And if there's a lot more supply of one, and we're going to talk later about the halvening, and there's a lot less supply of the other one, the exchange rate between the two has to really go up.
So you're basically saying because of the printing money by Fed, the exchange rate will go up, and it will happen for all fixed supply assets like real estate, gold, and Bitcoin, right?
Yeah, and it is, that is the policy objective. The government in the United States has been very clear. They want to get the stock market to stop falling, if not go up.
Of course. And
printing a huge quantity of money is an effective strategy if that's your policy goal. But it's kind of like hydrostatic pressure that if you lift the tide, it will lift all boats, and it's going to lift equities, it's going to lift gold, it's going to lift real estate. Again, relative to where it would have otherwise settled, but it'll lift rare assets like fine art, and it's going to lift Bitcoin and other cryptocurrencies. So again, there's been a lot of time over the last 7 or 8 years that we've been involved in blockchain, where people want to talk about how Cyprus is impacting Bitcoin or whatever. And I've always been pretty skeptical of drawing any of those conclusions, like how the real world and small little issues would really impact Bitcoin. But this thing is so massive, so global, that I think it's highly likely to impact the price of cryptocurrencies.
We saw cryptocurrencies drop sharply along with equities early in the cycle, I think somewhere in March, right? So is crypto still considered an uncorrelated asset class, as we were talking before? Or do you think right now, with everything is correlated, and because of the global recession, there will be no asset class that won't be affected by a recession?
Well, that's a great question. And statistically, over long periods of time, crypto really has zero correlation with gold, oil, equities, real estate, whatever. But there's a caveat, which we have just seen, is that in a crisis, an equity crisis, crypto does become positively correlated with the S&P or other risk measures. And so there have been 5 major downdrafts in the S&P since Bitcoin started trading in 2012. And in those 5 downdrafts, Bitcoin always became positively correlated. And it did so for about 31 days. And then over another 40 days, the correlation kind of dissipated back down to 0. And the past doesn't necessarily predict the future, so I'm not saying we should all just get little graphs of whatever happened in the past and trade. But I actually very strongly believe that in this case that will happen, and it'll actually happen faster than it did in the past. And so what we did is when the crisis first hit, we reduced risk in our hedge funds, got less long, brought our net long down, and we did actually take some risk to Bitcoin versus other things. We can get into that in a sec. But for just cryptocurrency itself, we decided to take risk down because we felt like, with the stock market's gapping down, and my macroeconomic opinion that this thing's going to be bigger and last longer than consensus, we wanted to reduce our risk. But we said at the time that it was only a matter of weeks, not months or years, before we'd want to bring our risk back up. And then we thought ultimately this would dramatically increase the price of cryptocurrency. We've actually covered that reduction in risk within 1 week. We only had it on for a week, and about 2.5 weeks or 2 weeks ago or so, went to limit long, and we've seen that actually work. That the correlation between crypto and the S&P is breaking down even faster than it has done in the past. And the price of Bitcoin is now way up on the year. It's up 15%. And everything else has, been annihilated. Stocks are down 19%. Oil's down 56%. So all the kind of standard asset classes are, suffering because everyone's dumping all that stuff. Whereas cryptocurrency is going up mainly because of these monetary policy considerations. But the story, I think, for, let's say, 6 months from now is I think you're going to see blockchain working very effectively in this financial crisis. And one of the things we said in our letter was Bitcoin was born in a financial crisis. It'll come of age in this one. And we're going to find out. And I'm very bullish on blockchain. I think it will. But basically, either blockchain is going to work over the next 18 months really well, or probably never will. So we're very closely monitoring indicators of blockchain's use in this financial crisis. And one easy one that you all can monitor is the issuance of USDC. It's a token that's backed by US dollars, US treasuries. And, it makes a lot of sense, right? Like in the previous financial crisis, if you had deposits at, say, a Lehman Brothers or whatever, it just didn't work out so great. Here, you can control your own tokens. They're fully backed. There's no reserve lending. There's no leverage or whatever. Fully backed by short-dated U.S. Treasuries. And even if you're in the United States, which is one of the more developed and safer financial systems, that's probably a good idea. But if you're in most of the world where the financial systems aren't very developed or trustworthy, man, I'd put some of my savings in USDC. So we've seen that grow about 60% in the last 4 weeks. So, that's an indication that blockchain is working. And all of our cross-border money movement companies are seeing a huge surge in the usage because it still works very well. Whereas, some of the other, fiat currency systems, aren't as effective right now.
It's interesting you're mentioning USDC, and we know there are other equivalents, and in essence, it's a stable coin, right, backed by sometimes 1-to-1 by US dollar or equivalent, and sometimes it's a basket of currencies as they try to do with Facebook Libra example. If you can help us to understand and simplify to our listeners the understanding of value add. Why would I invest in stable coin? Why would I invest in USDC as opposed to putting my money, let's say, into cash, ETFs, or mutual funds?
Yeah, it's a great question. They're really two kind of related but different things. So tokens, like Bitcoin being the first one, have some incredible advantages. You can send them to anyone, anywhere on Earth. You can send them essentially real time, essentially free, but wow, they have a lot of price volatility, like we've just talked about. They went down 40%. Now they're up 25% in the last couple of days. In the last couple of years, Bitcoin's went down 80%. Now it's up, 200% from its lows. So, that is, for me, I'm a trader, currency speculator, investor. I think volatility is awesome because, I'm here to try and make money from movements in prices. But for the normal person, and especially a migrant that's trying to send money home to their family, volatility is no bueno. So stable coins are the answer to that. They have all the benefits of a token like Bitcoin, being transferable, globally, borderless, pretty much free, pretty much real time, but they have no currency volatility. And most of them are essentially backed by a single dominant currency, like most are backed by the US dollar. Some are backed by other single currencies. I thought Facebook did a great job with the original construct for Libra to have a basket of 4 currencies. So it was kind of semi-stable coin, it was stable somewhat to the dollar and somewhat to the British pound and somewhat to the euro. But in general, it was, very stable, as a global currency. So stable coins, I think, are going to be very popular for people that just want to protect their wealth and don't want the volatility of, say, XRP or ETH or Bitcoin.
Yeah, thank you. It was important to understand the difference. And can you please also explain and describe the current state of Bitcoin in terms of institutional adoption? What we should be looking at? Are there some positive news?
Sure. And so it'd be good to split it onto both usage and investing. There's quite a number of companies like IBM and Microsoft and others that are really trying to foster the use of blockchain in their own business. And then on the flip side, institutional investors are seeing this as an opportunity. I actually really think it's a brand new asset class. I've lived through commodities becoming an asset class and mortgage-backed securities becoming an asset class. I think it's highly likely that 10 years from now, all institutional investors have a blockchain team. They have a blockchain allocation, and it's just seen as one other, type of asset class. There is this perception in our community, which well from conferences and stuff, that there's some kind of light switch that's going to happen, and there's one day no institutions are involved, and we're going to flick the switch, and the next day everyone's involved. And institutions are addressing the market and coming in. Over the last year or so, we've seen some of the largest endowments invest in blockchain, and they're normally thought leaders, and then that will help, other pension plans, other corporate types of investors, sovereign wealth funds, all the other types of institutional investors come in. So I would say that, prior to this crisis, I would have said that over the next couple of years, institutions are going to ramp up to having a few percentage points of their endowments or portfolios in crypto. I think this crisis is actually going to accelerate that in really 2 steps. I think that right now, the crisis is basically frozen all new investing activity for most institutional investors. First things first, they're all trying to make sure their families are safe. And so, the first instinct is just to kind of make sure everything's fine with your own family or your own community. And then survival. And the next step is just to triage your own portfolio. And, institutional investors have these really massive, very complicated portfolios. And when something kind of a once in a generation event like we just had here, it takes a while just to figure out, what the problems are and what they want to do about them. So I think it's going to take another couple of months for institutions just to kind of figure out and deal with their own existing issues and problems. And then over the next, say, 3 to 6 months, they will start looking at new opportunities. Like distressed debt is going to be a huge area for people to invest in. Special opportunity sales, there's going to be so many really amazingly strange dislocations that, there's going to be a lot of interesting opportunities for investors. And then, cryptocurrency is just one of those. And so, over the period, basically, probably the second half of 2020, institutional investors are going to, look at all these different things, all these different new opportunities that have been, shaken. out of this crisis and start investing. So my concept originally was that, Bitcoin and everything would go down for a few weeks. It kind of slowly grind up for, say, 4 or 5 months. And then I think like 6 months from now, you're going to see huge amounts of capital being allocated towards it. And then it will really get going.
Quick question to demystify certain concepts reported by biggest publications in the crypto industry. We've seen articles that, CoinDesk, Cointelegraph reported that Yale and Harvard endowments finally invested in the industry. So was it a direct investment in the projects, or was it an investment like funds, like Pantera Capital?
Yeah, it's a great question. I would say that it's both. Obviously, all those endowments know what venture is. They have an allocation to venture. So investing in a venture fund like ours, or anybody else in the industry that happens to invest with entrepreneurs who are using blockchain to do something better, faster, or cheaper, isn't that big of a stretch. Buying a cryptocurrency token, that sounds super edgy, and it sounds, really new and different. And so most endowments do start with venture because it's just something they understand. However, we have had some top endowments just go straight into our digital asset fund or into our cryptocurrency funds, because they expressly want that new asset, like owning a piece of a protocol is something you could never do in the past. I use the analog back to the first part of the internet where in the early 90s, if you were prescient enough to think the internet was going to be big and important, you really couldn't buy a chunk of the internet. You couldn't buy TCP/IP or SMTP, and you had to give your money to the sock puppet and hope you could figure out logistics. Here, you actually can buy a chunk of the network. Bitcoin has 21 million shares. There's a fixed quantity of, all the other protocols. So our advice is always you should have a bit of both because they're both really important and have different risk-return characteristics. And the majority of institutional investors start with venture, but some, just jump straight over that and go right into tokens.
Therefore, the question, how's this crisis affecting your strategies? Because you have a liquid fund, multicurrency fund, and a venture arm. So is this situation affecting the blockchain venture capital?
Yeah, so that's a much more difficult question. So right when this crisis started, we really thought a lot about it and quickly came to the view that it's unambiguously good for tokens, that it might take a few months for the whole thing to kind of wash through, but a year from now, tokens would clearly be way higher, and that's super obvious. Venture is, more specific to what the company does. And anytime you have a crisis like this, any kind of financial crisis like this, it's very hard in the, say, 6 months after for companies to get funded. And so for the portfolio companies in our portfolio or in our industry that are trying to raise money right now, it's really difficult because, as I said, most people's first instinct is to not take the fundraising phone call from one of their portfolio companies that's trying to make sure their family's fine and that everybody's healthy. And then they worry about the other problems they have, and helping to invest in new things isn't the first thing on people's minds. So I think there's going to be a huge contraction in the number of deals done in the venture space over the next few months. And the other reason there is a contraction is cryptocurrency tokens have real-time price feeds. They're transacted every nanosecond, and you can see what they're worth. And people who think they are going to go down, they sell them, and people think they're going to go up, they buy them. Whereas private equity, like venture, the markets are very illiquid, and it often takes quite a while for the supply and the demand curves to cross again. That a bunch of deals were happening right before the crisis, and everyone kind of has those valuations in their head, and then the valuation's probably a lot lower right now. So the entrepreneurs are probably still thinking the old prices, whereas a lot of investors in the venture space are either not investing at all or only investing at deep discounts. So kind of like the real estate market, after a crisis, prices don't change for a while, but the number of transactions goes to zero. And then 2 or 3 months later, when everyone kind of figures out where the right price is, they start happening. That's what our belief is will happen in the venture space, is that the number of transactions will go way down. I think the prices will go down as well in the short run, just because everything in the equity space is correlated. If all public equities are down 20% here or 40% in emerging markets, you would imagine venture in our space is going to go down something like 30%. But I think there's a very important distinction here. Some of the companies in the blockchain space are going to prove that their product really works during this crisis. And my USDC is a really great example. We're invested in companies like Veeam that do cross-border money movement that are seeing, record volumes because blockchain's open 24/7. It works, right? So I think you'll see a bit of a split in the venture space where the companies whose products are either immune to the impact of the virus or are positively impacted by these changes in behavior since the crisis started, those will ultimately rise quite a bit. Emphasis on the ultimately. I think it'll take a while. But there's a good stat from Cambridge Associates on the returns on venture funds that were in vintages prior to the last crisis and then after the last crisis. In the 10 years from 1999 to 2008 had an average IRR of 6.28. And then the years 2009 through 15, right after the crisis, had 18.21 average IRR. So, it's difficult to be thinking aggressively right after a crisis, but this is typically when the best returns are had is after financial crisis, where the valuations are cheaper, and to the extent some of these companies are going to really show that their product works, could really kind of credentialize blockchain.
Sure. It's important to hear this perspective from you. Another quick question before we go to other strategies. Are you investing right now in some other firms?
Yeah, we actually done 2 deals since the crisis started, which is proves my point that there actually was quite a lull in venture transactions in the blockchain space, essentially from the really midpoint of last summer through just a month ago. Our kind of total number of deals coming through the machine and the deals we invest in was probably half that the prior 12 months. And we've actually done 2 deals already in the last 2 or 3 weeks. One of which is a deal we've been working on for a year or so with a really interesting company whose business is an essential business in this crisis. And so we did a round directly with the company itself. But the other trade we did was to buy some shares off an early investor in one of our portfolio companies that wanted some liquidity. And they're hitting record volumes and they're doing really well. So we wanted to make sure we took advantage of that opportunity.
Amazing. And I'm happy to hear that you're investing, and I wish you to find some great new unicorns. That brings us to another question. How's the crisis affecting your other strategies like liquid and multi-currency fund strategies?
Yeah, so we've made a few changes in our multi-currency funds throughout the crisis. The first one I mentioned was, hey, when all the risk was being taken off on all these asset classes and everything was going down, we did take down the risk just kind of overall. And then we made a second view is that we dramatically increased our Bitcoin holdings at the expense of selling non-Bitcoin tokens, basically. And that the logic there is in crises in the past, and we thought in this one, there's a kind of human instinct to flight to safety is, the way they typically say it. It's awesome that people think of Bitcoin as safe these days. So, the big cap, the mega cap Bitcoin has more liquidity in, to the extent people need to liquefy stuff, they might be selling the small cap tokens out there. And then also, Bitcoin's been around for 11 years, it works, it never fails. And a lot of the other tokens are projects that have not yet launched. They might need more capital to get to the launch, and raising capital right now is probably pretty hard. So we felt there'd be a bias for investors who want to invest in something that already does work, already exists, Bitcoin, against some of these other projects that we own. They're really exciting and really cool long-term upside, but maybe in the short run, the illiquidity or the worries about funding would have their price not perform as well as Bitcoin. Fortunately, you've seen pretty much everything go up, or at least our portfolio's all gone up. Bitcoin's gone up a tiny bit faster than everything else, but most of the assets in our portfolio have actually held pretty tightly with Bitcoin. So it's encouraging to see, small, tiny projects all the way up to Bitcoin all doing very well over the last 2.
It's good to know, which brings us to the next topic. It's another big event. As you may know, we're expecting in May Bitcoin halvening. It is a very important event in the industry. So what's your take on it? Are you bullish? What do you think is going to happen to the price? If you can provide some predictions. And it would be great if you can split the answer into 2 parts. One is a prediction coming from your firm. Another is, what do you think is going to happen to the miners?
Yeah, it's a fun question. And, I remember all the talk about it the last time. It's, we actually held a big bet at our conference in 2013 on, what would happen with halving, or 2014, 15. And I have to admit, I'm wishy-washy on the answer. I think it'll have some positive effect, but it's neither zero nor the mega effect a lot of people want to ascribe to it. And the efficient market theorist would say, hey, if we've known about this thing for 11 years, it can't have any impact because we all know it's coming. So how could it have any impact? But the reality would be, your question about miners is, they're just businesses. They're making a widget. The widget happens to be called Bitcoins. They sell the Bitcoins in order to buy more machinery and electricity to make more widgets, and then they sell more Bitcoins. And so I think if in half and demand is constant, it has to have some upward push on the price. And again, the past doesn't necessarily predict the future, but it sometimes rhymes. So in the past, Bitcoin has troughed 405 days before the halving and has ground up into the halving and then past it. And it's essentially doing that this time. It hit its lows, about a year ago, and it's grinding up through the halving. And so I think the halving itself is kind of like a positive, but the main story is the $2 trillion in fiscal stimulus. The halving is definitely pushing in the right direction, but if you told me, there's only one thing that could happen this year in terms of, massive increase in the quantity of paper money or the halving, and which one's going to be more important, I think the monetary quantitative easing is a way bigger issue than the halving. But I do think the halving is a small net positive.
So positive, so you're still bullish on what's going to happen to BTC price?
I think, this is as strong as I've felt about prices since 2013 when I felt like, crypto was going to really melt up back then. And I feel this is as strong as I've felt since then. And I really feel like all these things, the fundamentals are actually really strong, like all these, USDC and, Veeam and other cross-border payments companies are doing really well. Is all these fundamentals are coming together right at the same time. The quantity of paper that's chasing around, this fixed quantity of Bitcoin and other cryptos, is all coming together. And your statement earlier that with some of these very, very well-respected endowments investing directly in cryptocurrencies or in venture in the blockchain space, that kind of removes the last hurdle for investors that really gives you cover to pitch this to your investment committee now that some of the most respected investors have diligenced it and decided that it's worth having some exposure.
So you don't see a danger of a sudden decrease in miner revenue, which may lead to a certain price correlations towards the BTC after the halvening, especially if we combine your previous statement about the global economic downfall So do you see the combination of these two factors resulting into a bearish trend?
No, I don't. I actually think the causality on mining versus price runs the opposite way than a lot of people say. In my opinion, the price drives how much mining capacity there is, and not the other way around. The mining capacity has no impact on the price. And so if the price of Bitcoin goes up 100%, doubles, the amount of capacity that miners put on the network will almost exactly double. That's the way capitalism works. And then the flip side is if the price of Bitcoin goes down and stays down and is expected to stay down, mining capacity comes offline. Miners go broke and other people don't put more hardware in. And so the so-called difficulty factor becomes easier, which is funny. It's just a funny way to say it is the supposedly super hard, mathematical problem actually gets easier. But it's really that, Satoshi's a genius in calibrating it such that every 10 minutes they issue the block reward. And if the price goes up 10 times, there's going to be 10 times as much hardware and electricity spent chasing it. And if the price goes down, people will go bankrupt and go offline. So Bitcoin already has so much more hash power than it would take to secure the network that even if 20% of miners just got unplugged today, it wouldn't have any impact on the system.
Interesting point of view. So now we're gonna have a blitz. Where do you see Bitcoin at the end of 2020? And maybe you can share with us some other predictions as well.
Yeah, so as I said, I'm as bullish as I've been in a long time, and I've seen enough of these cycles in human psychology to think that it's probably going to take 3 or 4 months to kind of get the momentum going. And I've had experience in 2 manic bubbles and 2 manic crypto winners, and it's super hard to get anybody to invest when the markets are down. And when it's at their peak on TV, and like in December of 2017, every news program was talking about Bitcoin. In retrospect, that was a terrible time to invest. And now, when it's actually probably a great time to invest, no TV shows are talking about it. Except you, of course, but it's not on CNBC or the national news. So I actually think it is a great time. And so over kind of throughout the next 3 or 4 months, I think people are going to really start doing the work, and then they're going to find out how much blockchain's actually really working, how strong the fundamentals are. And then towards this latter half of the year, it'll really get ripping.
Yeah, ironically, people disregard the old school fundamental advice, buy low, sell high.
So much FOMO about it that, when it's at its highs, everybody's talking about it. It's always on TV. And, if you don't have a big position, you feel, you really got to get involved. But then when it's down here, you don't have to address it because, as we were talking about, most institutions don't have an allocation to Bitcoin. So your boss isn't saying, hey, why are you underweight Bitcoin right now? Because you can be and nobody would care. So yeah, it's very, very pro-cyclical.
Who are the people you would advise to follow besides yourself, of course? Some of the thought leaders worth following and learning from them, forward thinkers.
Yeah, I would say, obviously Ethereum's co-founder Vitalik is great to follow. I love Eric Voorhees. He's founded Shapeshift, and we met way back. There's some other investors in the space like Mike Novogratz that known and worked with for decades who are have good thoughts on the industry, I think it's trying to stay. There aren't a lot of the one thing I am looking for is a contrarian that has a well-reasoned view, and I'd love it if any one of your viewers can forward me an article. What I'm really desiring to find, because when you invest, intellectual honesty is super important. So I'd love to find some very intelligent person who has written more than a few sentences that are negative about blockchain. You get the Warren Buffett saying it's rat poison or whatever, and that's just a kind of a throwaway line. But like somebody who actually writes like a multi-page paper, on why it's not going to work. That I would love it if somebody could ever show me that.
Well, you can talk to Nouriel Roubini, right? That's.
Oh yeah, he has predicted 100 of the last one crises in the world.
It is vitally important to learn from people who disagree with you, and people who have reverse engineered something, or they have an alternative opinion. That's also important to listen to them.
The markets are all about intelligent, rational people disagreeing, right? Like if we all agree, we wouldn't agree, right? And so I'm not saying it's 100% certain that Bitcoin's going to go up, but I think it's like 50-50 that it goes up like 20x, and you put those numbers together and that's good, right? And that's why I'm in the trade. It's not absolute certain that it's going to go up, but if it does, it could go up a lot, and it's pretty likely to go up.
Yeah, one thing is for sure that you are successful enough to have the right to even express an opinion. Like you started in 2013, right? You met your bet, and we cannot say the percentage, of your returns, but I can say it's a substantial return. So I believe that it's something that that is very practical, right? And another question I want to ask you at the end is basically, what book would you recommend for people who are beginners if they want to trade, or they're just looking to invest or understand better blockchain technology?
Oh, so I think the best entry is Nathaniel Popper's Digital Gold. I think it's great. It's got a lot of good characters and kind of shows, why crypto is, such a cool, interesting story. And then from there, there's a handful of books, getting into each of the different blockchains if people want to dig deep. And we actually have a very interesting list of very short things, very quick reads all the way through books on our website, and it's probably the best way for your viewers to look, depending on how much time they have or how deeply they want to dig. We have a couple dozen of the best periodicals and books.
Yeah, thank you so much, and I do appreciate your investment in the industry. I will put a link in the description for the resources. I highly recommend to subscribe to Pantera's newsletter, and I know that you wrote like hundreds of articles, if not thousands, and I know that you did a lot of public speaking, whether it was like at conferences or you just did webinars. And between yourself and Paul, and I know other of your colleagues, I've seen you almost at every big conference, right? And whether it's a traditional finance like connected to digital payments, or it's a crypto conference. And I think this is very important due to the lack of people who combine those two worlds, and just educating your investors is highly recommended, because they need to apply the calculated risk approach when they invest somewhere, right? So I think what you're doing, guys, are highly appreciated, and I cannot appreciate more your time, and I hope to see you again.
Great. Thanks so much. It was great seeing you again. Thanks for inviting me on.
Goodbye. Have a good one.